Today on the CEO Barbecue, we're looking for silver together with Silver Crown Royalties. If you want a bullet point summary of this and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, although the company you're about to hear from has not paid us for the production of this interview, you should still not treat this video as research. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. In any case, please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is an extremely tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, and it is also going to contain forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased. Although this company has not paid for the production of this interview, it doesn't mean they won't become a client in the future. They might. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Silver Crown is listed as SCRI on the NEO Stock Exchange in Canada, where over the last 3 months, the average volume has been only about 4,000 shares. So do note that it is rather illiquid, and hopefully more about that later on in the conversation. The stock's 52-week high is $9.85, and its 52-week low is $5.35. With a market cap of about 16.5 million Canadian dollars and 2.8 million shares outstanding, today this is a $6 just a $6 stock, but it's got a 50 and a 200-day moving average at respectively $6.26 and $6.89. So it is currently trading below both of them. There are about 1.7 million warrants in total with different exercise prices between $8, $13, and $16, with about half of them actually being at $16. In total, that brings the number of fully diluted shares to just under 4.5 million, meaning an increase of about 60% can be expected if all dilutive securities get exercised, which would then result in about a 38% ownership dilution if, and that's of course always a big if, but if those actually get exercised. And of course, this doesn't account for any future share issuances that might occur. And actually, there is one that was announced on May 20, which the company says it intends to issue over 300,000 shares at $6.50 with a full warrant at $13. Management is noted as owning about 20% of the company, while friends and family hold 9%, corporates are recorded at 9%, and institutions hold 15% of the company, leaving about half of it, or 47% to be specific, in the hands of retail investors. Moving on, I'll be looking at the financial statement, the latest of which shows us the numbers as of March 31st, 2025, which is when the asset side of the balance sheet held about $1.9 million in current assets, of which about 650,000 was cash, 820,000 was account receivables, and that's in the form of royalties receivables and some tax receivables as well. And then there's another $420,000 that was recorded as prepaid expenses. The liability side of the balance sheet was comprised only of current liabilities and specifically account payables and accrued liabilities for $230,000. Moving on to the P&L for the 3 months that ended on March 31st this year, Silver Crown recorded about $300,000 in royalty income and about $656,000 in operating expenses. It is worth pointing out, though, that $226,000 off that $656,000 expense was share-based payments, so the actual out-of-pocket cost was just shy of $400,000, or an average of about $130,000 on a monthly basis. Most of that money was spent on marketing and public company costs, which together accounted for about 56% of the cost, and personnel costs were another significant chunk, accounting for about 30%. Since this is not an exploration company, I don't have an exploration spend to go over, but the cash flow statement is telling me that about $1.5 million went out of the company as an addition to the royalty spent for the same 3-month period. And that was the first tranche cash consideration for the Igor 4 deposit, which we'll talk about later on. This is also where I typically give you the exploration to administration ratio, but again, I'll change it up a little bit because we don't have exploration here. And I'll call it the royalty generation to administration ratio. And we're looking at how much money was spent on royalty generating activities and how much money was spent on running the company. Well, that ratio is set at about 3.7, which means that roughly 3/4 or 75% of the money that Silver Crown spent during the last quarter was used for royalty generating activities, and thus 25% was used to market the company and keep the lights on. As always, though, please go to setterplus.ca and analyze their financials yourself, because I'm not infallible and it might be making mistakes in my reading or understanding of their numbers. And please also understand that the financial profile may vary from quarter to quarter. And of course, Peter and I will talk about their P&L in the latter part of this conversation as well. That all said, though, enough accounting for the next couple of hours at least, because we'll be talking about silver now, and more specifically, silver royalties. Gold Mountain's Elk Mine in BC and Pilar Gold's Pilar Complex in Brazil are the two paying royalties for Silver Crown, and though there's a bit of an asterisk there that we'll discuss later on as well. But the flagship asset, or the one that they like talking about the most, as far as I could gauge, is the Eagle 4 project in northern Peru. This asset is owned by PPX Mining, and Silver Crown paid $1 million as the first tranche for this asset just a few months ago again. And that's for the initial 6% royalty, which then could get a lift up to 15% with a 50,000 ounce annual silver minimum once Silver Crown pays a second $1.5 million in cash as a second tranche of this investment, hopefully later this year. And of course, more about that later on in the conversation as well. So these are the three main things, but there's also Tucano Gold's Tucano mine in Brazil, as well as BacTec's bio-leach facility, which I don't quite understand too well. But again, more about that later on. And I mean, as you can see and hear, loads to discuss here today, which means it's time for me to finally shut up and Peter, give you the word. But first of all, thank you for sitting down with me today.
Thank you very much for having me.
Pleasure is mine. It is your first time on a barbecue, though, which means that we'll have to do a smell test before the grilling actually starts. But even before that, maybe a bit of an appetizer. I looked at this, I looked at your presentation, I started wondering, why should I care in the first place? I mean, there's so many precious metal royalties out there, and almost all of them claim that they're trading at a discount to NAV. So is there anything that makes you different? Why should I care?
The biggest differentiator between us and the rest of the royalty companies that are out there is that we are 100% silver focused. And that puts us into a byproduct credit area of the market. So essentially, not the primary metal of the mines in most cases. It's going to be the secondary, tertiary product. And that is what we focus on. So the other royalty companies generally look at the overall royalty. So all the metals that are in the project. We're strictly focused on the silver aspect. And because of this, it also means that because there's no such thing as silver-only royalties, there may be some streams around, but generally speaking, there really are no silver royalties that exist. So that means we have to create them all, which means that we are very much a royalty generator as opposed to a royalty trader. So whenever there are royalties out there in the market that are changing hands, there's 35 different bidders on them. We're not going to be one of those.
Well, there's loads to touch upon there, and we will during our conversation. But let's maybe start off with the man running the company, which happens to be yourself. Who are you, and have you made money for shareholders before?
In a number of instances, yes, and not just shareholders, but also unit holders. Of course, I can't take all the claim for that, but a little bit on my background. So I'm a mining engineer by education. I did spend a number of years at Placer Dome, Canada, at the Dome Mine in Timmins, Ontario. I did spend some time in sell-side research with companies like Deutsche Bank, HSBC, Yorkton, Canaccord, but also on the buy side with Kevin McLean at Sentry. And this is where some of those returns come in. While I was with Kevin at the Sentry Precious Metals Funds, the assets under management from just around 300 million to 3.1 billion when I departed 4 years later. So quite a lot of capital appreciation there and accretion. So a little bit of shareholder returns there. I think Kevin was actually one of the best performing, if not the best performing mutual fund managers in Canada over that time frame. My most recent stint was in research at Canaccord, where I covered royalty companies, I covered silver companies, and I covered base metal companies. started the entrepreneurial route about 7, 8 years ago with a number of small companies that essentially, found a project, took public, etc. A couple of them worked out, a couple of them didn't, and that's the way it works with an entrepreneur. My last project before Silver Crown was co-founder of Star Royalties, which is a company that we built up portfolio royalties, took public, and eventually we pivoted into carbon offset royalties. At which point I decided to focus on single asset or single element royalty companies. And silver was the most natural choice because it was an area that was very overlooked and nobody else was in that square looking to do silver only deals.
I think Star is pivoting back to mining. Actually, I spoke to Kevin during PDAC, so I think they're pivoting back to mining. Which of those instances do you think you're? Because you said you started a couple of companies, so some of them worked out, some of them didn't. What are the ones that worked out?
So Star Royalties arguably worked out for investors that were earlier on, as well as there's been some trading that was able to be done there. So I think that was quasi successful.
Well, I think Star Royalties it's down 50 or 60% though. I think since it's listed. When did you guys list in 2021?
Correct. Yeah.
Yeah. Okay. Did you currently hold any other executive or board positions with other companies though, or is this your main focus?
This is 100% of my time. I am on the board of a very small company that's in the process of being taken over, and very little involvement there, if any.
Good. Management ownership here is noted as 20% of the company. How much of that is you personally?
10%, just under 10.
Okay, so half of the management. How did you get those shares? Founder shares or bought in the market and financings? How did that work?
All three, and sweat equity as well. I mean, management did pay itself in terms of equity and continues to do so as we move the company forward in order to maintain all fully aligned with shareholders. I mean, ultimately, the idea behind this company was that we would end up paying ourselves in dividends. So during that transition, we want to make sure that our investment positions are significant enough to make that dividend payout meaningful, but it would allow alignment with all of our shareholders in that, if we make money in terms of dividends, they do as well. And conversely, ultimately, I want to take $1 salary and make all of my income from dividends.
Mm. So what is what do you think the average cost is that you've paid for those shares?
For myself,
yeah.
I mean, would we count time as cost? No, it would be somewhere around $4. But in the market, I continue to buy all the time. For instance, I bought another 300 shares last week in $6 range. But my average cost base in terms of buying in the market is probably $7.50, $8.
How is talk to me more about that actually, market buying, because I'm thinking, how is insider and shareholder alignment looked upon within this? It's relatively new vehicle, right? And you've been almost a year that you've been trading. What I mean here is, will open market insider buying be encouraged, or how do you plan to keep insiders aligned with shareholders as you raise more capital to essentially grow the company?
Yeah, no, absolutely. It's encouraged. And we do expect additional participation from all shareholders, not just insiders, but also from the supporters that we've had along the way. And we do continue to get that. So on every financing, there is additional participation from basically everybody. We've not had any dissent in the company in terms of supporting it. Investors do believe in what we're doing.
Talking about insiders as a whole actually gets me thinking about the team. And this is a bit of a unique situation because you're a royalty company, but in general, I want teams to have specific experience for the task at hand. So talk to me more about that outside of yourself, the rest of the team. What kind of a team, maybe in the first place, that might be a good way to take it as well. What kind of a team do you really need for a royalty company, as well as specifically in your case, given that you have a focus on a single metal, silver in this case, but you do have royalties on, I believe, 3 different continents. How do you build a team that can manage all of that at the same time, backed by the needed experience?
Yeah, I think that you need essentially a day-to-day team that allows you to, obviously move the company forward, look at various transactions, do all the necessary work that's related to moving those forward. So I have a CFO that's full-time, and we have a corporate development individual who's, very helpful in terms of adding value to these day-to-day tasks. A little bit in the background, because he's not mentioned too much, is Patrick Sullivan, who's our corporate counsel as well as corporate secretary. He's part of the Fasken Mining Group, so he would be, one of the very, very important components of the management team or of the company in terms of day-to-day operations. Board, obviously, you want somebody that's experienced, that has had exposure to various parts of the market with different levels of experience from different areas. So we have a capital markets professional. We have someone that's very well plugged into the retail investment scene. In fact, two of those. And then there's myself, who's much more on the mining side and much more on the asset side, as well as, with pipeline development, things like this. Having spent 25 years in the business, I have a pretty robust Rolodex of various projects that are out there that will have silver in them, as well as various types of contacts in the industry that I can tap into. And that brings us to the advisors, which are, I would argue, very crucial, mostly because they don't have to be full time, so they're kept on standby and they're used as required. So we do have a couple of geologists and a mining/metallurgical engineer as well. In fact, I'll be going down to Peru with him next week, or sorry, in 3 weeks.
When you talk to me about the different insiders and advisors that you have here, do any of them provide services to the company outside of your regular management activities? What I'm talking about is marketing services or helicopter or something else in terms of services.
Well, they would provide marketing services in terms of word of mouth and telling people who they're involved with and what the company is all about, that kind of thing. But in terms of, additional cost, the advisors, they're, as we use them, we would pay them. Otherwise, there's no standby fees or anything else like that. And almost always they will take equity instead of cash, or whatever cash they get, they participate back on a financing with that again. And when it comes to the directors themselves, they are all compensated in equity right now. And we want to strive toward that until we're free cash flow positive. We want to keep the cost down as much as possible.
And that is the right approach, right? That's essentially what I'm checking for here. Also potential conflicts of interest and stuff like that. But maybe talk to me more about that. I mean, it's still in the same topic and still within our smell test and still talking about incentives, because again, different strategy than most juniors I talk to, where they might measure success as a discovery, right? Or something along those lines. How do you measure success, and how is executive compensation going to be structured and determined to reflect that? As in, what are your KPIs going to be tied to here? Is it that cash flow? Is it the share price? What would you consider success?
Success for us will be free cash flow and dividends. So, and then obviously that becomes self-rewarding, right? The bigger the dividend you pay, the more you're rewarded. So that's ultimately the idea here. When I said my goal is to take a $1 salary, that's absolutely true. So right now I'm contracted for 250,000 Canadian dollars, but for every dollar in dividend that I'll pay myself, I will reduce that salary by that amount. So ultimately, if I pay myself $250,000 in dividends, I'll take $1 in salary, and then everything over and above that, the salary stays at $1 and the dividends just, go up. So that's ultimately the goal, and the motivating factor here is to get that free cash flow, continue to grow the free cash flow through doing obviously accretive good acquisitions, because each one of them will have to be funded with additional capital. So we can't go out and do, deals that are not accretive, deals that the investment community would not like. We can only do investments that will be supported by investors. And ultimately, that free cash flow will be returned to them. And as it is being returned to them, it's going to be returned to management as well.
That's an interesting strategy, where you're essentially going to lower your paycheck to reflect the dividend or the amount of money that you take out of the company. Last year, for example, though, that 250 base salary was increased by 150,000 bonus, as well as a share-based payment that equaled your salary. So 650 total comp. even though again the stock went down during that year. So what about the bonus structure? How is that going to be structured? Is that tied to the share price, or what is it tied to?
We do not have an official bonus structure tied to the share price. So it is discretionary based on the remuneration committee's opinion.
So what did that look like last year? Because again, last year was kind of a half year of trading for you as well, maybe even a bit less. Because when did you list in September? I think, right?
It was July 25th last year.
Oh, okay, July. Well, so yeah, about a half a year of trading,
Yeah.
and then there was that bonus. What was that based on, and how what is that going to look like in the future? Again, I'm trying to gauge the
Yeah.
potential expenses
So,
here.
so, so that bonus was based on all the work that went into taking the company public and building the portfolio of the company as it went public.
Yeah.
Since then, there has been no bonus. As we continue to simply grow the company, that's great. But again, we haven't achieved free cash flow yet, and we're not paying a dividend. So, yeah, that's what's going to drive that. Whether or not the remuneration committee has any kind of a bonus in mind for whatever reason, I don't know. But as it stands right now, I get my salary, and if there's any kind of a discretionary bonus, that's up to them. But ultimately, the goal here is to be fully aligned with every other shareholder in that dividend payment.
This might actually be a good segue, Peter, into the section where we talk specifically about the business plan and your revenue profile. And you've now grown revenue multiple times in a row, although it's not large. It's not covering your costs. And I know you want to get to that point rather soon where it is, and you are cash flowing. But what about after that? And again, we'll discuss the short and near term here in the latter part of the conversation. But what's your long term business plan? Are you building a takeover target, or are you looking again to start paying that dividend and contain it for decades ahead, or how do you see that happening?
Well, ultimately, what I would like to build here is a dividend vehicle that competes with other fixed income products.
Hmm.
So essentially, a commodity money based treasury.
And that's something that you essentially want to run in perpetuity. Essentially, like
In
you're
perpetuity.
not looking to get bought out.
No, absolutely not. I mean, my dividend and my salary would go out the window if that were to happen. Of course, look, that's always up to the shareholders, right? I mean, if a bid comes along, then it goes to the shareholders, and that's it gets voted on. That's how it works. I'm not going to say no to that. Obviously, being a shareholder myself, but this is being built for not to be taken out, but to create that cash flow stream for investors.
Mm.
So something that would help with, somebody's retirement fund, or, that kind of prospect here. When it comes to being taken out, obviously, if you have, if there's a vast multiple differential and you have a lot of free cash flow, then it would make sense for somebody that trades in much more higher multiples to basically take you out. However, there is a way to essentially do partial takeout, in that you can collaborate or you can partner with whoever this entity is that wants you for that cash flow. You become a stake in the company for a portion of their cash flow that comes from a metal that they don't want, or that they don't care about, or is just too small for them to make any difference. So instead of being absorbed, you have a partial owner that exchanged free of charge to them a portion of their revenues for a multiple and an ownership in you. And then obviously they get the dividends and they get the free cash flow from you. They just allow you to continue to exist moving forward. And then you can continue to ferret out projects that you can then split along commodity lines. So essentially do syndicated deals, but instead of doing them along dollar terms, you do them, okay, we take the silver and whoever our partner is takes the gold or copper or whatever.
Mm. Is that what you think? That's an interesting topic, actually, to me, because is that what you think the future is of the royalty space as a whole? Because I feel like, gut feeling here, so no specific data, but I feel like there's too much competition, especially in the precious metals space. So, how do you see the future of the royalty space, and specifically the precious metals royalty space?
I think ultimately it makes sense. Obviously, not for the Francos and the Wheatons, the behemoths, the Goliaths in this industry, but for the smaller companies. In my mind, it would make sense to basically put that whole basket together and then spin them back out as individual single element royalties. So basically have royalties that are based on every single element in the periodic table. Now, obviously that's not the case for everybody right now, but there's enough copper, I think, there's enough titanium, lithium, there's enough uranium, there's enough royalties out there that could be put together and then split off on a single element basis. And that was our vision in terms of creating Silver Crown Royalties, is to just be silver. Right? I'm sure there's going to be a question, would you ever consider looking at any other metals? And the answer is no. That's someone else's job, right? What we do is just silver. Right? If we want to do anything in gold, we'll do just gold. But to your point, there already are 30 other guys doing just gold or majority gold, right? So there's really no point of having, I mean, we bring nothing to the table there. What we bring to the table here is the ability for a producer to crystallize value for a portion of their silver stream, which is economically not meaningful to them at 1%, 0.5%, but they can crystallize value for it by doing a deal with us.
You're kind of stealing my thunder because I was going to ask you if you'd consider something else. What about just before we move on, actually, to some of the specifics? Do you guys have change of control fees?
Yes, we do.
What are they?
I would have to check the contract. I think it's $2 million for management, but I'm not sure.
Okay.
So in a way, I think that we argued for a very big chunk so that it would stand as a poison pill for something that's very early on in its existence, like right now. And for when we do enter free cash flow, we wouldn't want to get taken out right as we're just about to get going.
Well, but doesn't that motivate you to actually get taken out though? Because it's multiples of your salary here. It's your base salary. It's almost 10 times your base salary, and the stock price is down. So if it'd be cheap to do a deal now, and you could probably sell it more easily, you'd make money, but shareholders wouldn't.
I can see how it could be looked upon that way, but the way that I see it, $2 million in 10 years is going to buy me $200,000 worth. And that's why we set up this company. And that's why I want to get paid in dividends. That salary that I'm getting, the 250, is going to buy me 25 grand worth in 10 years based on currency devaluation. And that's the entire objective of this company, is to protect investors' capital and to provide a revenue stream that is hedged against currency devaluation. And that's why there's the drive to get paid in dividends as opposed to get paid in salary. So that $2 million takeover fee is going to be worth 200 grand in 10 years. It's going to be irrelevant, right? If I took 1 million ounces of silver, on the other hand, now that's a good poison pill.
How do you finance the company throughout all that? I mean, you just announced the financing about a month ago. It's just an equity financing or an equity issuance. Is equity how you plan on growing Silver Crown Royalties going forward? Or do you think debt will become a part of it at some point in the near future as well?
It's all about cost of capital, right? So if my equity cost of capital is less than debt, then all I will ever do is equity. If cost of capital is competitive with debt, then I'll do a mix. And if debt is much more competitive to cost of capital, I'll do all debt. Now, I'll caveat the debt with saying that the only time that we will ever take down any kind of line of credit or any kind of debt facility is if we have enough free cash flow, not only to support the interest payments on that debt, but to actually be able to repay it from free cash flow that already exists at the time. So as of right now, even if we did have a credit facility and we don't, I would not be able to draw on it because we don't have positive free cash flow.
But this equity issuance that you're doing right now, then what about it right now? Again, you say you're trading at discount to your NAV. Again, stock price is down. So why do an equity issuance now?
Well, that's the only way to grow. If we want to acquire a royalty where there's a cash component to it, well, we need cash to acquire that royalty. Right. And I know this question is coming, but even once we have free cash flow, my objective is to grow the company twofold in terms of revenue every year without assistance from the silver price. So basically double the silver revenues every year just based on the number of ounces. And the only way to do that is through issuing additional equity. If we were to do it from free cash flow, and we're doing 25, 30% deals in terms of rates of return, it would take us 4 years in order to do another deal that would double the revenues. So in order to keep the growth rate that you mentioned, which is multiple fold, we will be a serial equity issuer.
How do you do that specifically this year? What else do you have coming up over the rest of the year? Like, what is this money that you're gonna that you're attempting to raise here? What is that going to be spent on?
So and you alluded to that, it's the Igor 4 project that PPX is operating in Peru right now. We have 6% of the silver as we speak. The $2 million raise that we're in the middle of right now takes us to 15% of the silver that's there. Now, economically, just to equate that to what a overall NSR royalty would look like, it's about 2% of economics. So it sounds like it's a lot, 6% of silver, 15% of silver, but this is a silver / gold mine with some other metals in it, of course. But economically, it's not a silver mine, so taking 15% of the silver really doesn't have that much of an impact on the producer. That gets us to a point where later this year we should be able to generate free cash flow at, based on $30 silver, around a $2 million Canadian run rate. So that's what this raise gets us to. It also helps us further point to what the return on invested capital would be, not only for that project, but based on all the capital that we've deployed so far. And then with every single additional transaction that we do after that. And yes, there are a number in the immediate pipeline. There's 3 of them in the immediate pipeline. There's another one, kind of call it near-term pipeline, 6 months. And after that, there's a lot of producing mines that have silver as byproduct credit that is on our list, and we'll just continue to wash, rinse, repeat, keep doing exactly what we've been doing, go down that list. The other thing that we're starting to do now as well is look at recycling facilities as a source of silver, right? And that's one giant departure from, again, the rest of the royalty companies. They've only ever stuck to mines, and specifically mines that have 43-101s or JORCs, or have the ability to at some point have that, because otherwise you don't have exploration, and this exploration optionality doesn't exist at a recycling facility or at a refinery or an autoclave. So we're looking at recycling facilities because they do produce silver. They're generally private, so none of the metals are reported publicly. So it does take quite a bit of legwork. But it's a huge opportunity because 15% of the silver market is from recycling in terms of production. So that's 150 million annual ounces. And with Igor 4, we're going to be at 78,000 ounces annualized. So you can understand why we would be very much motivated and excited to be pursuing the recycling space as well as the mining space.
How do you feed the beast in the meantime, though? I mean, the market always wants, constant news flow. They want to see stuff moving. Whereas, like with you, to build this, it's a bit of a slow ramp up, right? There's capital bottlenecks essentially that you have to solve here. So how do you keep feeding the beast? How do you keep the market happy in the meantime? If you, like, for example, if you're raising this money, if that's going to go into Igor 4, and that's essentially the only news for the rest of the year, how do you keep the market happy in the meantime?
Well, the plan is that that's not going to be the only news for the year. In fact, I would like to have some news out even before the quarter's out in terms of another transaction that we've been working on for a while. So, as we continue to move through the deals, I would like to see somewhere in the neighborhood of 1 to 2 deals every half a year. So we've averaged that, and I know it doesn't sound very aggressive. And to your point, it is. It has been. It still is a capital bottleneck in that it's been the access to capital that's really been what's been holding us back. However, going forward, I think that as we grow and become more relevant, access to capital will become easier over time, and we'll be able to do more deals quickly. So going from 1 every 6 months to 1 a quarter, that seems like something that's very achievable. And as well, as we continue to grow the company, we can do bigger deals, right? So we don't have to just continue to do the small deals like we've done. Each sequential deal can be larger. And in fact, if we think about Igor 4, that's going to be the biggest one that we've done in full. And the one that we're hoping to announce is going to be, bigger than that one still. So each sequential transaction can be bigger as well.
that's something that we'll talk about later on as well. I do wonder about the profile of the assets that you're going to go after. So we'll get to that for sure. Let's maybe talk about the assets that you have right now, though, and kind of talk to them one by one, if you will. I want to start off with the Elk Gold Mine in BC. That's had a bit of a checkered last few years, as well as some controversies, if you will. What's going on with that right now? And can you expect any money from it this year?
We do expect money from it this year. In fact, later this month or early next month, we expect to continue to be getting paid. We have received all the money for last year, and we're just waiting on the money from first quarter. Yes, there's been transition there in terms of operatorship. There is, the New Wellman construction group has essentially taken over the mine, and they're in the process of reevaluating what the resource is and how to better attack it going forward.
So what's going on right now? More specifically, what are they doing? What's the outlook? Talk to me more about that.
Yep. So what they're doing right now is they're recalculating the technical information in order to better address grade at the mine, as well as they're putting together a plan in terms of which different areas to go after in the short term, and then as well go underground later on, probably next year. So it's essentially being reevaluated right now as we speak.
Do you think
that's my understanding of it anyway?
Is your guys' belief that the relog that was triggered by the data integrity doubts, if you will, could that lower the grade or your production profile as a whole? Or like, what's the expectation for the result there?
Yeah, I think it can lower the grade overall. I think it can lower the total number of inferred ounces. And I think that the total number of recovered ounces, I'm not sure if that's going to change very much at all, but the overall resource may be smaller on the recalculation. Again, this is just speculation on my part. Generally, when you get an announcement like that, it's not because it's positive, but because it is negative. And what that should allow for, though, is a better understanding of how to mine the ore body. And I know that there was a difficulty with dilution previously, as well as sequencing in terms of going after the ore at certain times during the year. So hopefully this recalculation resolves those two issues.
But your NSR is based on the resource, which, again, they essentially no longer think it works. So where does that leave you? Are you going to have to renegotiate a deal, or what would that look like?
No, the 90% silver NSR stays. And as long as the mine is operating, the payments for the silver, the minimum deliveries, which are set at 1,500 ounces a quarter, that continues.
Okay. What if it did, though? I understand you may not necessarily want to think or talk about it, but could you renegotiate the NSR or do something else contractually to put yourself in a better position, or not necessarily, to take advantage of the situation, but protect the downside, essentially? Is that something you could do?
Well, I think that with the minimum deliveries, we do protect the downside. And in terms of renegotiating, we didn't have any kind of a pushback based on the structure that we have right now with the operator. So I don't think that there's going to be any reason to do so. And I don't, as well, because of the minimum deliveries, and we didn't talk about that yet, but that essentially is an incentive factor for us for the way that we structure royalties to get the producer aligned and get them to aggressively expand or grow the project, etc. So what we've done in this instance, it was a $6.5 million transaction, but we've only given them $3 million so far. Right. So, had we taken a look at what the mine plan called for when we were evaluating the project, and it was actually going quite well at the time, then the full $6.5 million could have been deployed. However, being skeptical, we said, okay, well, so far historically, you haven't hit that target, so we'll just pay you for what you've already done. And if you do better, we'll give you more. So essentially, from our end, we're motivating them to operate the mine properly and to actually achieve success. Until they do, the deal price remains $3 million, and that's all we've put into the project so far, which is substantially, again, less than what they could have argued for and have. But again, because of the sequencing and their inability to hit their targets internally, we didn't deploy the full amount.
You say that you still expect money to come in from that royalty. How likely do you think it is that the whole situation is going to get resolved, though? Because again, Gold Mountain's having cost issues right now as well. They have that debt as well as there's just cost pressures, and the revenue is obviously not where it was before. So, how realistic do you, I personally believe that the timeline is realistic, or that the whole situation is going to get resolved?
I think it is realistic. And the reason I think that is because New Wellman Construction is not a small outfit that only operates one thing. This is a real outfit. They have contracts with other major miners in the area. And this can effectively serve for them as an operation that they can turn around despite the associated cost. Now, where they get their money from, that's up to them. But the project itself, I think it's a valid project. I think it's very, very workable. I think there is a mine there. Question, when? When does all this turn around? When does it happen? I think that this can all be resolved by the end of this year.
What if, a bit of a what if again, but what if they go bankrupt? And again, that's not something anyone's hoping for, I guess, but where do you rank on the claims list? And can you realistically realize any value even if they were to go bankrupt?
So in terms of the royalty itself, that's on title. And in terms of accrued payments, that would be, obviously, we become a creditor to the asset, but the numbers are so small as to become irrelevant in terms of the actual, past payments. Mm-hmm. So it really is about keeping ownership of those silver ounces that are in the project, which we will continue to have indefinitely.
Okay, so if they were to go bankrupt but someone else picks up the project, starts production, that you would still get paid. Essentially, in the meantime, you have no claim to any other value. It's just you own the title. That's it.
Correct.
Okay. Well, I suppose to flip that around, if everything goes as planned here, are there? I think there are sweeteners that you have to pay, like bonuses essentially tied up to this deal that you're obligated to pay. Maybe I think you touched upon it just earlier, but maybe talk to me more specifically about that. What is it that you would have to pay if everything goes as planned for them?
Yeah. So the way that works is for every 500 quarterly ounces in the floor increase, right now the floor is 1,500 ounces a quarter. If that goes to 2,000 ounces a quarter, and by the way, that's based on 6 months trailing production. So they, Gold Mountain can't say, oh, we're going to do 300,000 ounces next year, give us money. They have to already have delivered at a certain rate in order for that bonus payment to be made. And from this point forth, all bonus payments are made in equity.
Okay. And that is...
And that's based on a dollar price or VWAP, whichever is higher. But I forget right now exactly what the contract calls for in terms of what the dollar price is.
Right. Okay. Let's move on maybe to the Pilar complex. There seems to be some challenges there as well. There are two $81,000 US dollar checks that are in default, if I understand correctly. Is that money that you still think you can get?
Yeah, we believe so. What Pilar is doing is they're in the process of dewatering the mine, and they're in the process of staffing up again. They ran into some issues with capital in terms of being able to maintain their equipment properly, and that was the bottleneck for them when it came to production. They essentially went tools down about 6 months ago, and they've been trying to recapitalize since. The gold price obviously has helped. The Brazilian real is not doing overly too well either. So the mine, in effect, has actually, those ounces are now more profitable than they would have been 6 months ago anyway. But yeah, the management now, they've been kind of stretched thin with Tucano as well as with Laiba. But those two projects are now moving away from their hands. So they've refocused 100% of their efforts on Pilar. And they're in the process right now of raising a little bit of capital to restart it. And we expect that to happen sometime in Q3.
You expect them to raise capital in Q3 or be back in production in Q3?
Restart. It would take them about 4 weeks once they have the capital required to start pushing ore through the mill again.
Okay. So it's essentially just They have to refinance it, and then the restart is easier, and then they start paying you with. Are they going to pay you all at once, or is that going to be back end weighted? How do they pay you what they owe you essentially?
Yeah, they would pay us from the first two shipments from the mill.
How much are they going to pay you? Is it everything that they owe you so
But
far, and
it's
then they'll be
no,
back to
it
schedule?
would be half and half. So the first shipment will pay for half, the other shipment would pay for the second half.
Okay. Um, and then they're back to the normally scheduled payments then.
Yeah.
Okay.
Correct.
The mine does seem a bit problematic, I suppose, as a whole. I mean, historic people failures is what I found just looking briefly or Googling briefly, really. Cyanide spill are the first things that come up when you Google it. What is it that you like about this asset? What does this specific asset fit within the Silver Crown Royalties portfolio?
This was the first one where we were able to source silver that's not in a reserve or in a resource. So what we ran off was historic relationship in terms of production and in terms of payable silver relative to gold.
Mm-hmm.
So we estimate that there's over 1.5 million silver ounces here based on historic relationship silver to gold ratios at the mine.
Hmm.
And because it was not in a 43-101, it was not in, any kind of a report, even from when, Equinox had it, even from before when Yamana had it, Brio, it allowed us to essentially crystallize value for that silver that otherwise would not have happened. So that's what attracted us to this project was there was a lot of silver there that was unknown.
But do you still like it the way you did? I mean, you said that's what attracted you there in the first place, but do you still want to keep this royalty, or would you potentially be looking to get rid of it?
Yeah, no, absolutely. I like to keep this. I mean, look, at the end of the day, it's all about returns, right? If somebody offers me a massive return on this royalty, then it will be considered. But this is a very long-lived asset. It's got a mill on site. It's ready to go. So, it ticks all the boxes there. Great jurisdiction, etc. This, I like the long life about it. There's also exploration upside in the vicinity. So this one ticks all the boxes for us.
I should have asked you the same question about the BC mine, that Gold Mountain operates. Is that something you'd like to keep, or is that something that you'd prefer to transact away from?
We'd like to keep it, but again, if somebody approaches us and says, "Hey, we'd like to pay you for this or whatever," yeah, by all means.
Sure. And then last, but maybe should have been first, but Igor 4, that seems like your new baby here, if you will. They're currently awaiting permits, if I'm not mistaken. What's your expectation for that operation?
So what they're doing, they're actually producing, and they have been for quite some time, 6, 7 years, something like that. The reason why nobody really knows that they're producing is because under a kind of a IFRS anomaly, if you never reach commercial production, you don't have to report revenues or costs on an itemized basis from the operation. The other part here as well, because it's never reached commercial production, but also because it is a joint venture between them and their operator, it simply shows up as a single line item on the income statement.
Okay.
So it presents as an exploration company or something that's not producing, but it very much is producing, and they have started paying us on the 6% silver royalty that we already have there. So in terms of counterparty risk, this is, I'll argue, the best one that we have right now. And again, this speaks to, each sequential transaction will get better in terms of, all the various components that can go wrong with it. So, after this one, there's one that we're working on again, hoping to get that announced sooner rather than later. But that one's a producer as well. It's in Peru, restarted, etc. But back to PPX and Igor 4, what we really liked about it was not just the fact that it was producing, that was good area to work in, but also they do have financial support from one of their biggest investors, their biggest investor, in fact, which is the Takahashi family in Peru.
Mm-hmm.
Think Carlos Slim, except for instead of telcos, it's textiles. and the Takahashis put a bunch of money into equity, and I suspect that they were in part the ones that drove this turnaround. So when the company was originally put into production, they were shipping ore, and they still are shipping ore about 600 kilometers away for processing at a custom mill. And that mill's charging them an arm and a leg anyway. So what their objective is to put a plant on site and essentially create concentrate there and then ship that material as opposed to having to ship it to the mill. So they're in the process of building that, and we were more or less last money in on that transaction. So it's a step function as well. They're going to go from what would ultimately be somewhere in the neighborhood of 4,000 or 5,000 ounces a quarter based on a 15% silver royalty to 15,000 ounces a quarter. As well, it's not as early as Q4. That's when the payments start. That's when the minimum payments kick in as Q4 this year.
What do you think of their timeline to be? They want to have it again finished by 2025. It sounds aggressive on the surface. Do you think it's doable?
They were good at providing updates, so they seem to be hitting their stride. I don't think that there have been any major month, 2 month, 3 month delays, anything like that. So things are still progressing and should be on target for Q4 startup. And again, because it ends up being economically 1-2% of overall project, it shouldn't be crippling for them, even if there are shortfalls in Q4 to fulfill that payment.
So there's nothing in between like permitting or social anything that they have to get. They just have to do the work, or what else do they have to do?
I think they're pretty much done. I think that there was one other permit that they needed. I'm thinking back here. I'm going by memory because it's been a while since I checked. But it's essentially, to my understanding, a rubber stamp process in terms of, okay, you're already operating the mine here, so now you want to put a slab of concrete over there. Okay, go for that kind of thing. Right. It's not like they have to go through another EPA study or anything else.
Right. How's community, or how is the community? Is there a community opposition where they are, or what does that look like?
No, the community is aligned. They have a lot of the locals working at the mine and the various mine workings, and they have very good relationships with them.
Okay.
They're also using a local contractor with whom they extended their contract successfully. So yeah, no, it's everything's going well.
When's the next update going to be on this asset?
From PPX themselves or from our end? Well, from PPX, I'm not sure. From ourselves, it's going to be whenever we fully close the remaining 9%.
Right. Okay. And it's not like because you said they do a good job of updating it. It's not like they provide you like quarterly or monthly updates, or what do they provide?
Well, it's ad hoc. It's whatever they provide. It's, as things move forward, they put out a press release, that kind of thing.
Right. Okay. A couple of more things to talk about here. BacTec, if I'm pronouncing correctly, or BacTec, whatever, BioLeach. What is this actually?
Yeah, so that's a proprietary bioleaching technology which will be used to reprocess old tailings. So back in the day, especially in South America, you would have very little regulatory oversight in terms of tailings deposition, what's in them, etc. And what BioTec Environmental wants to do in this particular instance is they've identified arsenic-rich, sulfide-rich tailings that they want to use this technology on, and it's more biotech than it is anything else, to essentially filter out or take the deleterious elements away from that solution and essentially just end up with gold and silver in the circuit. And then that's what will get recovered.
How is their permitting process? Are they having to get any additional permits or anything else? What does that look like?
Well, the key thing for them is financing. So that's what Ross has been working on there for quite some time, and he continues to work on that. And that's the number one hurdle for them, is to actually get this thing funded so they can start construction.
Hmm.
In terms of permits, I suspect that things have gone, along with the financing, but there's been a lot of runway here. So I don't think that there's going to be too much of a constraint or concern with that.
How much money do they have to raise, and how long could it take before they start essentially sending you a check, I guess?
It's in the tens of millions. I'm not sure exactly what the number is. We'd have to check with Ross on that one, but 2 years sort of is the kind of time frame that we're looking at before we could get payment. Right? They got to build a plant, they got to start processing, and then we start getting paid. That one we structured very much like the Gold Mountain, in that they get 1 million up front, and there's a couple of reasons why we like this one and why we did it, even though it's not a producer. First of all, this is an all equity deal. That's actually being done at $10 a share, and even when the deal was done, we were trading at about 7.5. So, not a bad premium to the share price where they took paper. But it's a three-stage deal, $4 million, $1 million on signing. So that's done. So we issued them equity, 100,000 shares. And that's part of that corporate ownership in the pie that you see. Mm-hmm. 1 million they get once they're fully financed, fully permitted, and they start essentially, planning construction, or their construction is starting. And then the last $2 million they get once they're producing.
Right. Okay. Is any of that buyable? I mean, could any of the companies buy any of the royalties that we've discussed today back?
Trying to think if BacTec has any buybacks. I know that Gold Mountain's got a buy down. Pilar, I think, has a buy down as well, and PPX is a capped royalty, so that one just goes away after they deliver 225,000 ounces.
When is that in terms of timeline?
4 years.
4 years.
Yeah, 4 years inclusive of Q4 this year. So
Okay.
it's 16 quarters starting Q4 this year.
Yeah.
They'll deliver at a minimum 225,000 ounces divided by 16. So
Okay.
50,000 a quarter-ish.
And you're not looking to divest essentially from any of these 5 royalties. Am I getting that right?
Correct.
Okay. Is there a specific part of the world that you want to go, that you want to focus on going forward? What is it that you're really looking for? Because you said, you want assets. Essentially, what I'm getting, or what I wrote down, is that you want assets where silver, and that's most of the assets. Silver is mostly a byproduct in the way silver is supplied, but is that the only requirement? Like, have an asset that where silver is a byproduct, or do you have other requirements in terms of where in the world you want to go, or the size of the asset? What are you thinking?
Yeah, in terms of geographic location, we want to stick to tier 1, tier 2 jurisdictions until we have positive free cash flow.
Yeah.
But ultimately, we also don't want to put more than 10% of our invested capital into any given project. So once we grow big enough, obviously we've only done 4 deals. So, can't have 10% and 4 deals. So, we'll need 10 deals plus, but ultimately we don't want any one deal to be a dominant deal for us. And the reason for that is because we've seen one too many times a company, and it doesn't matter if it's in a royalty space or if they're a miner themselves, they only have one asset, or they have one major asset, and something goes wrong, right? So what we kind of plan for, hopefully we don't anticipate, but what we plan for is essentially 50% success rate. In that we're looking to do transactions that are 25-30% IRR. So if half of them fail, you're still getting 15% returns, 12.5-15% returns, which is not bad. I mean, if you look at the overall return on invested capital for the best royalty company, it's low double digits, 11-12%. So that's not a bad target. But obviously we can't get there if we do one big deal and that one deal fails, right? And you can have 1% failure rate, but if you have 99 tiny deals and one giant one, and that 1%, one giant one fails, you don't have a company anymore. So that diversification strategy is very key for us. And what that also means is that, we can go to more interesting places ultimately, but very much keeping that risk mitigation approach in mind, in that, okay, we're going to go there, but we're going to allocate 0.25% of our capital to that risky region because it is very risky. And we're going to want a return that's significantly higher than 50% or 100%, right? So it really does depend once we're big enough, once we're generating free cash flow, once we do have dividends, going to these other places, it's really going to be, situation by situation, case by case, and the returns will have to justify the risk.
Mm-hmm. So it is still, though, when you say tier one, tier two, what do you mean by that? Is it kind of North, South America, specific jurisdictions there? What are you thinking?
Yeah, North, South America, Australia, Botswana, Namibia. Those basically the only two places for now in Africa, maybe Tanzania. We have looked there. But yeah, sticking mostly to Canada, United States, Chile, Argentina, Peru, obviously Ecuador, with Cisco and Franco-Nevada in Ecuador, I don't have any problem doing something with BacTec there. Brazil, Colombia.
Yeah. Do you think your team is going to have to grow as you grow as a company? Because one of the advantages, I suppose, to royalty companies is that you can there's no cap on your revenue, but there's more or less a cap on the administrative spend, or do you not think that's the case with you?
Will the team grow? Perhaps. This is something that I want to think about once we're free cash flow positive, right? That's been the single biggest driving force for us. And I don't want to think about growing the team before, we have free cash flow and a dividend. So I don't want to put the cart before the horse. Can we do 2 deals a quarter with the team that we have? Absolutely.
Mm. Well,
ultimately, once we're a couple $100 million market cap company, sure, yeah, we can grow the team out a little bit, get some more people, whatever. But that's not really top of mind for us right now.
Ultimately, this goes back to what I asked you earlier. How do you build the right team for a royalty company of this sort? Because as a royalty company, you have to deal with different type of assets, right? Different ore bodies, different geologies, different engineering profiles, and then at the same time, different jurisdictions, so different languages and everything else. So could that be a bottleneck? Not having the right team or a large enough team in order to grow the company. Could that be one of the bottlenecks?
Yeah, I think what you're talking about or what you're asking here is in terms of a due diligence team.
Yeah.
So I think that there's a way to due diligence projects into basically paralysis, meaning that you don't end up doing anything because you identified a small risk potential for the thing to not work while overlooking the major risk, which is something that no one can control. And this is when I talk about government policy inside of a country, which nobody has any control over. And you can spend tens of millions of dollars analyzing the assets, and then the government shuts the project down and you did nothing wrong, and you still lost money.
Mm-hmm.
So in terms of looking at assets, looking at projects, because we do focus on producing assets, it really comes down to, can this project operate until we get our money back? Right. So if we're looking at 30%, 25% returns, that's 3 to 4 years. Right. And anything after that, you don't really have any visibility on anything anyway. Right. In fact, in a lot of the cases, you don't even have visibility that far. But generally, you'll have a lot more comfort in that kind of a time frame than you will in year 10. Right. Every single mine plan is dependent on commodity prices any given day. Right. If you work at an operation, there's a two-week mine plan.
Mm-hmm.
That's basically, okay, we're going here, here, and here. We're going to go to this stope, this stope, this stope. Prices change, you go somewhere else. Right. So looking at an overall mine plan that's 10 years, it will change on a day-to-day basis. So having comfort around 3 or 4 years, that's really what we kind of focus on. Get our money back, and then everything else is gravy.
Yeah. Yeah.
Right? But also for us, where this kind of gives us a little bit more comfort is those minimum delivery obligations. Right. So we don't have to overanalyze an asset. Is it working? Is the ore there? Yeah. Okay. It looks like that. Okay, fine. Is it a scam? No. Okay. So, are these guys going to be capable? Have they been getting paid? Have they been operating this thing properly? Are they going to be able to operate it properly until we get our money back? If the answer is yes to all of that, and then the agree to delivering that minimum amount of ounces over a certain time frame, then that's a green light.
Yeah.
Right now, you don't need a team of 50 to do that. You don't need to spend tens of millions of dollars to figure that out.
Hmm. Well, that's part of the royalty business model that actually makes it attractive, in my opinion. So that's why I'm asking you. What about telling the story and marketing it? What are you planning for marketing? Do you have a different approach, or is it a combination of, as it often is, conferences and digital? What are you thinking?
No, it's attending conferences and utilizing certain personnel in certain parts of the world for certain things. We do have a marketing budget of $250,000. That's probably going to be something that increases as we grow. Actually, that will definitely increase as opposed to, additional people on staff.
Mhm.
But yeah, I mean, that's top of mind for us, getting the word out, making people know that Silver Crown exists. I mean, we're still a tiny company, brand new. So yeah, it's very important to get eyeballs on the story.
What are you planning on spending on marketing? Again, as I mentioned, over the last quarter, it was over half of your admin spend was marketing. Is that where you want to keep it, or is it kind of see as you go type of thing?
No, I think it's going to grow simply, as we continue to grow the company, again, get to that free cash flow. Like I said, it should be there Q4 this year. Um, yeah, we'll be revising the budget every year as we go. So Q4 this year, we're going to have another look at it. But right now it's 250. Is it going to go to 350? Probably. I mean, you're looking at annual inflation at 10% plus anyway. So in terms of outlays, cash outlays for marketing related efforts, it's probably going to be going up at that clip.
Talk to me more about what you want to get out of it. I mean, so and what exactly you're going to spend that money on, because it's not a low number, right? I mean, it's a lot of money that you'll be spending on marketing, and I understand that marketing is a bit of a necessary evil in our space, if you want to call it that. But you went into a $15,000 a month marketing contract with your last news release. That's what I want. That's what I saw. It's to be paid in cash and shares, and kind of a 2/3 cash, or I think one of it. I mean, it's either 2/3 cash or either two-thirds shares. What's the goal of this specific marketing contract, and is this the type of contracts that you'll be chasing?
So this is every single group has their own sort of pool of investors that they have relationship with, or potential investors that they have relationships with. So that's essentially what we're trying to do here, is get exposure to as many of these. And in this particular instance, it's high net worth individuals as opposed to institutional clients, of which there's a lot more high net worth individuals or groups, family offices, etc. There's a lot more of them than there are of institutional investors. And this product is very small for institutional investors anyway, locking out essentially 90% of them. So the objective here is to get those introductions through these relationships to this particular type of an investor, and get them interested in the story, and kind of expand that network.
Why pay them with shares though? Because I suppose on the one hand you say your shares are undervalued, and then on the other hand you're using them as cash. So did they specifically want shares, or did you like to pay? Like, well, why pay them in shares?
I'm not sure if I said that our shares are undervalued. I know everybody else says that, and I know that you said everybody says that.
I have that assumption. That's right.
But look, the shares are valued whatever the market values them. I value them where I value them. Of course, I think they're cheap, but I'm not going to beat anybody up over that. We use them because of alignment, and frankly, because I want them to believe and understand our view of looking at our price and our valuation. And now, if they take equity, obviously they're motivated to make sure that the share price goes up, right? So they're going to use their contacts, they're going to use their relationships, they're going to use their own pocket to prop up that share price, or, to buy in the market, whatever. So that's number one. Number two, of course, is given the choice between using equity, which I think is more or less properly priced on a trailing 6-month, trailing 12-month basis, versus using cash, which I have to pay certain people in cash, like lawyers, for instance, auditors, they don't take equity. So every time that I can pay somebody in equity as opposed to cash, which, is always at a premium, I will take that opportunity. I'll take that option.
Why I'm asking really about why you use them as cash and who you're giving them to is important to me as well, because first of all, it's a relatively illiquid stock because you don't have a large number of shares outstanding in the first place. So who gets them is important to me because I want to know what they want to do with it. And looking at the share price over the last, since you've been listed really, even though silver has done relatively well in that period, your stock price is not reflected that. Your revenue's gone up against stock price is not reflected that. Could it be because you're paying people with shares and they're essentially not the people who you'd want to be aligned with, and so they're looking to exit, or what's going on? Why is the stock price not going up?
Yeah, so the one thing about how we pay with shares is, we don't just give out free trading of stock. They're part of the RSU compensation structure. So it's not like they're getting something they can just dump on the market next week. That's one part. And the other part as well is that, if they are actually getting free trading stock, and obviously in time that does happen, right? That RSU becomes free trading. They can then use that as marginable equity. Right? They don't have to sell it to realize the gain or the value. They can simply deposit it with a sympathetic broker and borrow against their position.
Mm-hmm. Yeah. So what do you think? What do you think then in that case is causing? Why is the stock price down and not up in this environment?
Yeah. So in terms of the founder round, in terms of the $4 round, there's some free stock. I mean, all that stock became free trading on the IPO date because we did a continuation into British Columbia reporting issuer. So essentially, we did become a public company, and then when we listed, the stock did become free trading. So there was some pressure from that. There was some forced liquidation in early April from a couple of accounts that had margin pressures, not from our name, from other names, but they were liquidated by the broker. And once in a while there is forced selling that hits the market, and that's so I kind of know where that stock came from. And there's probably at this point maybe 60, 70,000 shares that are in the money today.
Mm-hmm. Yeah.
Right. The average cost base for all of our shareholders, including myself, is north of 650. It's actually between 7 and 7.5 for most of us, or for those that would be selling or could sell. For those that are less than that, there's very few shares left that have that average cost base.
Who owns those shares that the ones that are in the money already?
Those would be earlier investors from the $4 round. And because they're not disclosed, I can't say who that is.
Okay. What is it? What do you think are the largest risks here, worries? I mean, nothing's really ever perfect. So what keeps you up at night when you I suppose think about Silver Crown Royalties specifically?
Access to capital and timing. Right. Having been in the business 25 years, I like to think that I'm conservative in terms of timing, but things always come up, and you're always dealing with other people. And they might have their best intentions, and that's great, but reality of it is, you can't count on anything until after it's done. Right. So even talking about potential future transactions, things like that, I mean, it's as excited as I may be about them, they'll always take longer, and they may not necessarily cost more, but they'll take longer to do. They'll take longer to fund. They'll take, so that's the one thing that keeps me up at night is, making sure that the story is conveyed properly so that expectations are not built that then cannot be met. And the biggest driving force behind that is it's access to capital. It's how long it takes to raise money, how frustrating that process is. And there's absolutely nothing that you can do about that, or I can, or anybody.
Overpromising and under delivering, I suppose, is one of the other plagues, if you will, in our space that are actually not always intended. I mean, sometimes people think they're promising reasonable things that eventually end up not happening due to whatever forces of the market, I suppose. So that's a valuable concern. What else? What am I forgetting to ask you here, Peter? What did you come here hoping to talk about that I failed to bring up?
Oh, I just wanted to talk about the company, wanted to get the name out there. Exactly what we've been trying to do for the last year, and we will continue to try doing that going forward, and be active on various types of media, including this. So, yeah, thank you very much for having me. One other thing that I'll add about the share price and why we've not participated in the last, lift in the silver price. With open deals, open raises, certain types of investors cannot buy in the market. They have to wait for the transaction to close. And we actually announced this financing before silver broke through that $35 line. So the entire silver advance, you'll notice, we've not participated in at all. So hopefully once this financing closes, there's going to be re-rate higher so that we're closer to where our peers are trading.
Well, that'll be something that I'll be looking out for. And for people listening and watching, please let me know if I'm forgetting to ask something. Hopefully, Peter and I can do an update interview sometime later this year and answer all those questions. But I really appreciate your time, Peter. Thank you so much for sitting down with me.
Thank you very much for having me.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."